Welcome back to the Capital Mindset Show. Hope you guys are having a great day. As always, today we're going to be covering Albertsons as well as the acquisition with Kroger. So without further ado, there's an acquisition. Kroger's acquiring Albertsons for about $34-ish a share. I think it's $34.20. And so we're going to go from there. I think, well, $34.10 or $34.20, I forget. Either way, we're going to be going over that as well as a large YouTube channel that has made a bit of a blunder, kind of showing us yet again that they provide probably zero quality control, and they don't really know what they're doing. Yeah, we'll get to that. But yes, so Kroger and Albertsons are combining to make one large company. Now, Walmart controls about 25% of the grocery store market share. And so this company is still going to be well below that or around there. So I don't really think there's really an issue in terms of competition. So there's already a very large player. And, you know, if they want to basically bring their operations up to the scale that Walmart is at so that they can effectively compete on price, etc. So we're going to be going over a video by a channel called Everything Money. But before we do that, I wanted to shout out this video that we made about a year ago, back when the channel was one of the first videos on this channel, about Albertsons. We liked the company at the time, and the price was around where it is today. And one of the components, or one of the things that I didn't buy it myself, but I do believe that my ex-co-host Austin did acquire it back in the day. We'll get into some of those details. I preferred Ingles Market, but it is what it is. And then, so we're going to cover Everything Money's take on this. So I'm going to let them speak, and then we're going to be discussing what happened here, why is it wrong? I don't know.
All right, now here's the issue I have, guys. When it comes to Albertson, they announced they were going to buy, Kroger was going to buy Albertson for $34 a share. It's currently at $26 a share. Usually when there's a merger announcement or an acquisition, the stock of the acquired company is usually higher because it goes right to pretty close to where the acquisition price is. Makes sense. This one did not. Did it jump? Absolutely. But it's still far away from 34. Why is that? Well, there's a lot of concern that this will not go through. Obviously, the market's saying we're concerned about this thing happening because there's going to be a lot of regulation. People are going to, the government's going to get in. I think it's the FTC.
Okay, so I just want to say that he's incorrect about saying that there's an arbitrage opportunity, and we'll go over that. We'll actually do the calculations here. We'll use a bunch of free resources to kind of figure this out. It only takes a quick Google search, but yeah. I also want to say I need to redact something I said in the past about Everything Money. I have, formulated criticisms against this channel as far as its quality goes, its takes go, its research goes, and even its tools, without really, showing them how to correct it. But I have to redact saying that they are the purest form of analytical investing. I have to redact that because that would be offensive to analytical-driven investors. They are perhaps of the lowest form of that. I don't even know what to call them, actually, personally. So I don't even know, what to classify them as. So I redact calling them analytical investors. I don't have currently the purest example of an analytically driven investor. And again, that was not to be necessarily a compliment, because you don't want to do that, because it's a component of both story and also using your analytical mind. But yeah, I just wanted to say that real quick.
The Federal Trade Commission is going to get involved and see, is there any concern about monopolistic in the area power by the merged company?
That is true.
This is telling me that there's a lot of concern about that.
That is wrong.
Because if the deal's going to close, I don't know when the deal's going to close. I didn't check it out exactly. Let's say 6 months.
You didn't check it out at all.
This should be pretty high. This should be well over $30 if there's a high likelihood of the deal happening.
You did not check it out.
This is telling me there's not. So is there an arbitrage play here?
No.
Absolutely.
No, there's not.
But for some reason, you believe this could happen. You sit there and say, I'm going to buy the shares right now at 26, and I think it's going to happen. And when it does happen, I get $34 a share. I make a $8 premium on a $26 investment. I basically make 30% of my money in 6 months, whatever the date is.
No,
that is a
that's okay.
Very common play for a lot of investors. Banking on arbitrage. If you look back at the Activision deal with Microsoft, Berkshire bought a lot of Activision, saying we're making this as an arbitrage play, and the reason being is
it's not an arbitrage, it's merger arbitrage, but
Microsoft's got a ton of money and they want to buy this company, so we think it's likely to happen. We're going to buy Activision and make this play. Okay, now that's a very common theme amongst investors. What I want you to do is focus on the company.
Okay. Yeah.
Because if you buy it and it doesn't go through, it's very likely the stock falls. So looking at the 8 pillars.
All right, I'm going to just pause there because I don't really care about the rest of the video. I haven't seen the rest of the video. Maybe we can go over it I don't know if I feel like it towards the end. I'm kind of doing this on the fly, so we'll see. But the main issue, and again, I'm going to be using free accessed information, so information that you all out there can readily access with, just using Google. And so it's not paid information or anything like that. It's not some special service that, you got to pay in order to access. None of that. So this is all going to be free. And I'm just going to walk you through how you can quickly find out why this take is, frankly, of the lowest form quality value out there as far as Albertsons goes. But let's start with the acquisition itself. So you can find out that, okay, if you take the acquisition of Albertsons right here. This is an article that proposed. We need some further context. It is actually stated in here, but I'm going to get another article that you might find on the internet that says it directly. So we see that Albertsons will pay a special dividend of about $6.85, all right, for shareholders of October 24th, $6.85. You can see that there, correct? All right, so remember that. So if we take the current price is $27.05, around there. So that equates to about $33.90. Okay, so $33.90. What is the acquisition again? Oh, that's right. It's $34.10. So that is just a 20-cent arbitrage opportunity, right? It seems like potential merger arbitrage opportunity. Not what he claimed at all. Okay, so companies do this a lot, right? But maybe he's never seen something like this. I don't know, because he's had supposedly like 20 years of experience investing in the markets, and he doesn't, catch these things. But anyways, so you want to be careful when you're trying to claim that there is a merger arbitrage opportunity, because you want to look at first at the component of the deal. Now, the market is ascribing some delta between the acquisition price and, the current market price, but it's very minimal right now. It is very minimal. And so where is this $6.85 coming from? Well, if we go and investigate a little bit further, we find out from, let's go to, I think it's this article that I have it pulled. No, it's not this one. So this is actually the announcement. And you will be able to find this on Kroger's website, Albertsons' website, and other websites that host this kind of information. So let's find, for example, the SpinCo. It says it right there. So subject to the outcome of the store divestitures. So why would they be doing this? Well, the regulatory thing that he did address, okay, is the FTC might be concerned about this. So what Albertsons is willing to do is make some concessions. What are those concessions? Well, we will sell off some of our assets in order to make this deal happen. Okay, what are we going to do with the cash that we generate from the sale of those assets? Well, what we're going to do is we're going to give it to the shareholder. All right, we're going to give it as a form of a special cash dividend, all right, in the form of $6.85. Okay, makes sense, right? So keep following along. We say Albertsons Co. is prepared to spin off at the closing in conjunction with the regulatory clearance process described further in the transaction details below. As part of the transaction, Albertsons Co. will pay a special cash dividend of up to $4 billion to its shareholders. The cash component of $34.10 per share consideration will be reduced by the share amount of the special cash dividend, which is expected to be approximately $6.85. This cash dividend will be payable November 7th, blah, 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 blah. Okay, so this presents a premium of 32.8% to the unaffected closing price, blah, 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 blah. But you can see that a huge portion of that is the cash dividend, which is already paid, well, not paid yet, but it's declared, and it will be effective for shareholders after October 24th and payable in November. Okay, November 7th, 2022. So if you buy it before then, you should be able to get it. And if I were to do that, I would get in a tax advantage account because who knows. And then there might be a reason I want to play that. Again, who knows? Now, as far as some other components, there are some other things I wanted to discuss in here, but let me see if I can find it. So they talk about synergies and all that, and Kroger cash additional provided SpinCo. So here it is. So the per share cash component price payable to Albertsons Co. shareholders in the merger would be reduced by an amount equal to 3 times 4 wall adjusted EBITDA for the stores contributed to SpinCo divided by the number of Albertsons Co.'s common shares, including common shares issuable upon the conversion of Albertsons Co.'s preferred stock outstanding as of record date, blah, 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 blah. So basically, they're going to be paying for a fixed amount of valuation of the stores. And so that's the per share cash purchase. So per share cash purchase price payable to Albertsons co-shareholders. There's just a little bit of details about that. All right, so you guys can read into this and figure it out, or you know, if you're interested in buying the stock, you should be able to find this information, look into this information, come to some sort of understanding of this information before moving forward, not doing this. So I hope that this video, or this part of the video, has provided to you some value, and hopefully has corrected the bad information I think is objectively bad from this video here. And yet again, I am shocked the level of quality presented by this creator. Absolutely shocked. It can't be better, guys. It just can't be better. And this is only like scratching the surface. I don't have the time to cover all the blunders. It's really bad. I know that there are other people within the community that do talk about it all the time, and they share it with me, and I kind of go, oh, geez, that's bad. But yeah, it's pretty bad. But my current opinion on Albertsons, I don't really have one as far as whether or not I would invest in it. I would have to like look at it a little bit greater detail. And you know what? Like I said in earlier parts of this video, I feel like it. Let's see what their valuation is. So I'm just going to skip through it to find the valuation. So they kind of, let me see. All right, so they're talking about this. All right, let's go there. I don't care about that. Okay, the little cool tool, which by the way, Strongman Personal Finance recreated for you guys, and it's nothing special. It's an Excel sheet. It's actually probably inferior to an Excel sheet, which makes it even worse. But all right, so they have a low, mid, and high of $17.92. Ignoring completely, first of all, the circumstance that they're currently at. So that's again, and then I would question the quality. Yeah, I don't really. There's more questions than answers here, because I don't, right off the bat, mentally, I don't think those are correct. I think that those are piss poor assumptions that they got going on there. But anyways, that's just my opinion. You might disagree with me, or you might agree with me. Let me know down in the comment section below, I guess. With that being said, oh, one last thing. There was, well, I'll leave that for another video. So that's like a teaser, but you don't even know what I'm talking about. I'll see you guys in the next one. Bye.